Did you know that the US government just quietly bailed out Japan? Today I'm going to be explaining why this happened and how the slow motion economic crisis that's unfolding in Japan not only reflects the internal economic problems in the Asian nation, but also reflects the growing cracks in the global dollar system and the gradual decline of US dollar dominance. So what exactly is happening? What is this bailout that I'm talking about? Well, if you don't follow the financial media, you may not have heard about this, but this August, the US Treasury quietly bailed out Japan. The US Treasury engaged in an intervention in the foreign exchange market to prop up Japan's currency, the yen. And this was the first time that the US government had done this since 1998, when there was a financial crisis unfolding in East Asia and Southeast Asia. Now, the surface level, very basic explanation for why this is happening is simply because the Japanese yen has been falling very significantly against the US dollar. The Japanese government is concerned, and the US government is also concerned, and this is why the Donald Trump administration openly intervened in the foreign exchange market to try to prop up the yen. Bloomberg referred to this as an unusual operation, and it quoted the Treasury Secretary, Scott Bessent, who's a billionaire former hedge fund manager from Wall Street. And this is what he said of Japan, quote, "We will do whatever it takes to support them," end quote. And he claimed this is also about supporting the American economy, which actually is true, because the reality is that the US government is not only trying to stabilize the yen with this intervention, but it's also trying to stabilize the dollar system. And some mainstream American economists have acknowledged that this intervention in the foreign exchange market by the US Treasury reflects the decline of global dollar dominance. And why exactly do I say that? Well, the main reason is because Japan plays a very important role in the global dollar system. In particular, Japan is by far the largest government holder of US Treasury securities, that is US bonds, US government debt. I'm looking here at the official data published by the US Treasury showing the top foreign government holders of US Treasury securities. And you can see that Japan has been number one for many years. The Japanese government owns roughly $1.2 trillion of US Treasury securities. That's US government IOUs. Now, China used to be another major holder of US government debt, but in the past decade, China has been gradually reducing its holdings of US Treasury securities as part of de-risking and de-dollarization, so the US government cannot weaponize China's holdings of US government debt. Of course, the Chinese government is very independent, but in Japan, it's the exact opposite. What this all demonstrates is how Japan plays a very important role in the global US empire, not only economically, but also, of course, militarily. The US has roughly 750 military bases all around the world. Japan has more bases than any other country. The US has roughly 120 military bases and other installations in Japan, hosting more than 50,000 US troops. Of course, they've been there since 1945, since the end of World War II. But it's not just the military aspect of the US empire, but also the economic and financial aspect that we can see symbolized in the subordinated role of Japan, which is that Japan has a large manufacturing sector, especially for high-tech manufacturing. Japan exports these products to customers all around the world, and normally Japan has a very large current account surplus. That means that it makes much more income from the rest of the world than the rest of the world makes from it. However, what does Japan do with all of this wealth that it earns through exporting goods to countries all around the world? It stores much of those savings in US dollar assets. And this is exactly why the Japanese yen has been steadily falling against the US dollar, despite the fact that Japan has this large current account surplus with the rest of the world. Because Japan is a key part of the global dollar system. By keeping its currency, the yen, weak, which also helps to increase the competitiveness of Japan's technology exports, by keeping its currency weak and keeping the US dollar relatively strong, by converting much of its savings into US dollar assets, Japan is helping to maintain global dollar dominance. And it's not only Washington that benefits from this subordination of Japan, but also Wall Street. Because it's not only that Japan buys trillions of dollars of US government debt, but also that Wall Street financial firms, investors in the US and across the West and much of the world, they all benefit, they profit from the depreciating yen through something known as the carry trade. What exactly is the carry trade? Well, the idea behind it is very simple. It's when you borrow money in one currency that has a low interest rate in order to buy another asset in a different currency that has a higher interest rate in order to benefit from the differential. So for the longest time, Japan had extremely low interest rates and the yen was falling against many other currencies. So what investors in the US and the West more broadly would do is they would take out debt denominated in yen. So they have yen denominated loans, and then they would use that money and convert it to US dollars or other currencies. And then they would buy financial assets in those other currencies that had higher interest rates, like US Treasury securities or Mexican bonds or bonds from other countries or stocks. And then they would have much higher returns in those assets denominated in the other currency. And then when they have to pay back the money that they borrowed in Japanese yen, they simply sell that asset, convert it back to yen, and then pay off the debt that they owe in yen. But as long as the yen continues to fall in value against other currencies like the US dollar or the Mexican peso, investors can make a lot of money. And Wall Street has made enormous profits from the yen carry trade. This has gone on for years. And one of the reasons is that this is not just private financial markets. It's not just the invisible hand. It's also because the US government and the Japanese government have a kind of unspoken agreement where they're facilitating the carry trade precisely in order to benefit Wall Street, US financial assets, especially US stocks from big technology companies. And Japan has allowed this because Japan's exporters have benefited, because as the Japanese yen continues to depreciate against the dollar, it makes Japanese exports more competitive. And they're very concerned about competing with China because China's become the world's manufacturing superpower. So by keeping the yen weak, it helps Japan's manufacturing sector to compete. And actually, we saw a good brief summary of this in an article that was published by the editorial board of the British newspaper, The Guardian. And I actually agree with this analysis. I'm often critical of The Guardian, especially its reporting on West Asia and Latin America and such. But I think this editorial is accurate. It's called "Trump Wants to Keep the Easy Money Machine Running." This is what they wrote. They argued that the US Treasury's intervention in the foreign exchange market to prop up the yen, quote, is less a rescue of the yen than an attempt by Scott Bessent, the US Treasury Secretary, to preserve a cash spigot that benefits the US. Japan's ultra-cheap money has become a global funding utility. Bankers borrow yen, sell them for dollars, and buy higher returning assets, notably tech shares, end quote. That is the carry trade that I was just explaining. They noted that, quote, Japan's carry trade is one of the reasons Wall Street can lever hundreds of billions into AI. Washington wants to keep this tap open, but not at the cost of a collapsing yen or US Treasury sales, end quote. And this is such a key point. The US government is very afraid that Japan's central bank will sell its holdings of US government debt, US Treasury securities, in order to get dollars to intervene in the foreign exchange market by buying its own currency, the yen, with those dollars in order to strengthen the value of the yen to prevent it from depreciating further against the dollar. But for Washington, this is a big problem because, as I explained earlier, Japan is by far the largest institutional holder of US government debt in the entire world. The Bank of Japan holds nearly $1.2 trillion of US treasuries. That means that the Japanese central bank has this massive war chest of dollars that it could sell in order to strengthen its currency in the foreign exchange market. However, if the Central Bank of Japan continues to sell more and more US Treasury securities, it's going to cause the yield on US Treasuries to rise significantly, which will lead to a rise in many different interest rates across the US economy. So for instance, the 10-year US Treasury yield is the benchmark rate that is used, for instance, by banks to establish the rate of mortgages. So if the 10-year yield keeps rising more and more, it means that mortgages for American families will also continue to rise, along with the interest rates on car loans and student debt. This could cause big problems across the US economy. And in the past several years, especially coming out of the pandemic and the inflation crisis we saw coming out of the pandemic in 2021 and 2022, US Treasury yields have been rising significantly, and Washington is very concerned about it. This is also a problem for the US government in terms of its debt. The US federal debt is more than 120% of GDP. However, supporters of modern monetary theory, MMT, have often pointed out, and it is true, that the US government cannot run out of dollars to pay its debt because the US issues dollars. So technically it is true that the US government can simply monetize the debt, print lots of dollars, and the Federal Reserve, the central bank, can just buy more and more US government debt. However, the big problem with this is ultimately inflation, because the more that the US government does that, the more it can contribute to inflation. And we've already seen in the past several years how inflation has been out of control in the US. There's more and more discussion of a cost of living crisis that's happening in the US and many other Western countries, by the way. And this is one of the reasons that Donald Trump was elected in 2024. He falsely claimed that he was going to solve the cost of living crisis and bring down inflation. He's done the exact opposite. His war in Iran in particular has made inflation even worse. But regardless, let's get back to the point of US Treasury securities. I explained that the US government is very concerned about foreign holders of treasuries selling those treasuries because it's leading to a higher yield and higher interest rates in the US. And this is especially concerning for the US government because if you look at the data of the total share of US Treasury securities held by foreigners, you can see that in the past decade, the number has fallen sharply. In the 2010s, more than 45% of all US Treasury securities were held by foreigners. Since then, that number has fallen significantly, and today it's only around 1/3. Moreover, if you look at the data, you see a very interesting trend. Now, the number of outstanding US Treasuries, US government debt, has exploded in the past decade. So there are more and more treasuries that need to be sold by the US government at auction to investors. However, despite the fact that there's more and more supply, there's shrinking foreign demand from foreign governments. If you look at the data, you can see that in the past few years, the amount of US treasuries held by foreign official investors has been static or has even fallen. At the same time, you've seen foreign private holders, that is investors largely in foreign hedge funds, they have been buying more and more treasury securities, but not foreign governments. One big reason is that many foreign governments now fear the politicization of the US dollar and the weaponization of US government debt. We especially saw this in 2022 with the proxy war in Ukraine, where the US and European countries froze $300 billion of US dollar and euro denominated assets held by Russia's central bank. And then the West has used that money to help to fund and support Ukraine. This was a huge wake-up call to countries around the world because foreign central banks said, wow, if the West can seize the assets held by the Russian central bank, then they could probably do it to us. Of course, I should point out that this was not the first time that the West had seized foreign assets in this way or frozen these foreign assets. For instance, the US government also previously froze the assets of Iran and the DPRK, that is North Korea, and Libya and Syria and Venezuela and Afghanistan. But when they did it to Russia in 2022, that was crossing a red line. That was crossing the Rubicon. Russia is a great power. It's a major country. And we're talking about hundreds of billions of dollars of US treasuries and also European bonds that were seized by the West. And fears of the weaponization of US assets and European assets in this way have led many central banks, especially in the global south, especially in BRICS countries, in the past several years, they have been buying lots and lots of gold. So they're not buying US treasuries, US government debt, but they are stockpiling gold. In fact, this is why gold has now overtaken US treasuries as the number one asset held by central banks all around the world. This is according to a report that was published this year by the European Central Bank, the ECB. They use data from 2025 showing that now gold has overtaken US treasuries in the reserves of global central banks. So with all of that said, let's go back to the issue of Japan and why the US government carried out this intervention to bail out Japan and prop up the yen. I've been explaining for several minutes here about how the US government is afraid that Japan might sell its US Treasury securities, which would lead to the yield on US Treasury securities to keep rising, which would lead to higher interest rates in the US and make it more difficult for the US government to finance its debt. Because again, I mentioned that US federal debt is now more than 120% of GDP, and the US can continue to print more and more dollars, but the higher that inflation is, the more that the Fed needs to raise interest rates to combat inflation, and the higher interest rates are in the US, the higher yields are on US Treasury securities, the more expensive it becomes for the US government to service its own debt. And if you want to learn more about these very important issues that are happening in global politics and the global economy, make sure you subscribe to our work here at Geopolitical Economy Report. I am Ben Norton. I'm the editor-in-chief. I want to thank everyone for joining me today. Please like and subscribe. Please share this. I will see you all next time.